I'm Kevin Bailey, and I'm the Chairman and CEO of Podere Energy. We're listed on the Australian Stock Exchange, and our ticker is PVE on the ASX, but we are also on the OTC in the US, and our ticker is PVLEF. So great to be with you, Matthew.
Great to have you here, Kevin. We've not met or spoken before. I always like to sort of know who I'm talking to. So what's your story? What's your background?
I've got a background of about 30 years in the financial services sector. I was very heavily involved in the investment sector, and I retired from that. I listed my company on the stock exchange, merged with about 15 other companies. It's a bit like herding cats. And then we got taken over, and I had the opportunity to chase some of my passions. And so I've continued to invest in my own right. That was back in 2013, 2014. And prior to that, I had a bit of a military experience. I was with the Australian SAS. And so people wondered how I could go out of the SAS into the financial services. And it's a bit of a jungle in the financial services sector as well, I can tell you.
That's a good one. Right, okay. Fighting fit and raring to go. Here we go. So, look, we better also, if you don't mind, look, we're going to talk about gas today. We're going to talk about that in the context of Italy specifically and Europe more broadly. What's the big idea? What have you come in to try to do with the company and the assets?
Sure. It's a bit weird to have a Italian gas company listed on the Australian Stock Exchange, but effectively back in the 90s, the Italian government, in joining the EU, had to divest 50% of their assets. So they employed McKinsey to come in and assess all their assets. And of course, the partner of McKinsey was an Australian who looked at some of the assets. A number of years later, when the Italian government was selling off some of the assets and the licenses, he got together a bit of a consortium of people in the financial services sector, and they listed Podere Energy on the Australian Stock Exchange. So we've actually been going for about 20 years now, 21 years. I invested for the first time as an investor in Podere Energy in 2008. Not a good year to be investing into a company that is very cash hungry. So, of course, my initial investment went down dramatically, but I'd researched the assets and they were exceptional quality assets. So I stayed invested and added considerably to my portfolio, to the point where I ended up with over 10% of the company. And then I asked for a seat on the board to keep an eye on my investments. By early 2021, 2022, I became the chairman of Podere Energy, and a number of the major investors asked me if I would step up and take on the role as chairman. And we then looked very quickly to raise some capital to retire all of the debt, all of the convertible notes, and have a clean balance sheet. We then got approvals from the Italian government. We then built a pipeline 1 or 2 kilometres to the national grid. And we already had a well that was drilled called Podere Maiar, and we were able to connect that up and start producing gas. Of course, I had one thing going in my favour when I took over as chairman, and that was that Russia invaded Ukraine, and suddenly the Brits, the Germans, the Italians, everyone got a bloody nose depending on Russian gas for their domestic production. So energy security became the name of the game, and we did all of our analysis for the gas price at a average price of what we called was 20 euro cents per standard cubic metre. We had our worst case was 10 euro cents, and the best case scenario was 30 euro cents, and we haven't traded much below 30 euro cents ever since that situation. So we're in a situation where we've got a real tailwind behind us, and we've got the Italian government under Giorgio Meloni really encouraging us to drill as much as we can and to get as much gas into production as we can. The three things that the Italians are very focused on, of course, reducing their emissions, and gas is a transition fuel. They were using coal and oil. They've got no nuclear. So therefore, gas is the way that they've been able to meet their Paris Accords. Reducing emissions, the price being at a reasonable price, and the other one is energy security. They had over 40% domestic production. They reduced that down to 8% by the time the Russians invaded Ukraine, and now they're fighting very quickly to get it back up to 40% domestic production. So that's really the story. We're in the right place at the right time, Matthew.
Right, and quietly building up a kind of cash reserve as well.
We are indeed. We actually knew that where E&I had drilled in the past in the Po Valley region, which is that river, the Po River, runs from up in Torino, down through Milano and Bologna, and goes into the ocean at Ravenna and into the Adriatic. But that whole region is where most of the onshore gas is in Italy, and also very close to the industrial base. So there's not much in relation to transportation cost. And our concessions are within 1, 2, 3, 4 kilometres from the national grid. So we're drilling just north of Bologna. And what had happened when E&I went through there in the 50s and 60s, they left behind a number of anticlines where there were fairly substantial pockets of gas that they knew were still there, but they'd gone on to where the big, large fields were. And we came along, we drilled in 2017. We proved up the concept that there was a lot of gas there, and we then were able to connect that area to the national grid. And we've been producing about 10,000 Australian dollars worth of gas per annum, 80,000 standard cubic metres per day. And we've been able to produce about 6 million euros, 10,000 Australian dollars per day for the last 2.5 years. And we're now in a position where we've got a substantial amount of cash in the bank. And by the time we get the seismic completed, which we're in the process of doing right now as we speak, we then will have the approvals through shortly thereafter. We are banking on and very comfortable that we'll be able to achieve that. We'll then start drilling, and the Italian government has asked us to, instead of drilling one well at a time, they want us to drill 4 or 5 wells fairly, contemporaneously, so that we can get the thing online fairly quickly. We think we can do that, and that's really the name of the game. We're running this as a business. We're looking at, literally it's going to be 2, maybe 3 years at the most, but 2 to 3 years we should have, 3, 4 or 5 times the amount of production that we've got at the moment, and we've got a clean balance sheet, and we're in tremendous shape.
Right, okay, so one producing well at the moment, cash flowing, great. And what the Italian government wants is one thing. In terms of how you get after 3 or 4 or more wells using your money, not theirs, how do you plan to do that?
Well, we've actually looked at the seismic on the known 2P reserves that we've got in a number of the concession. In the concession, we've got the Selva Malvezzi concession, and we know where we want to drill. The seismics, we're doing 3D seismic, which is going to firm all of that up. And so we want to bring some of those contingent resources into having them quantified as 2P resources. And those reserves, when we make them into reserves, we can then connect them to the grid, and we will be able to do that. We've got Tessai, which is a company that we use for the first pipeline and installation plant. In fact, we can use the same installation plant that we developed for the Podere Maiar well. It's all been built on skid. It's skid mounted, and so we can expand that up to around about 300,000 standard cubic metres per day. And so we've got lots of expansion capacity there, and it's literally 2 kilometres from the national grid.
Right, and what's the sort of cashback situation? So what are you producing for? What are the margins involved?
What we've got to pay is a royalty, which is about 10%. Our cost of running the company at the moment is less than 2 million Australian dollars, about 1.2 million euros. We're not going to be increasing that running cost because we're outsourcing a lot of the the pipeline and the installation plant and that sort of work. We haven't released to the market exactly what all those costs are, but we're looking at lots of our optionality in the different ways that we can do things. But we think that we're very close to being able to do it from our cash flow, or being able to, borrow short term, a small amount of money, or potentially do a small raising. So we've got lots of options there to bring those on stream. And the return is the free cash flow is about 60% at the moment, but we think that's going to even increase more as we bring the additional wells online. So it's very much a cash cow once we've got the construction done, the installation plant done, and the connection to the national grid.
Right, and what's that process like? Because obviously I'm going to want to have a conversation with you about how do you scale up, and how do you stop plowing money back in the ground, and when do you actually get to a sort of genuine free cash flow number versus just a cash flow number here?
To focus on, we're an investment company a gas company that's focused on investors. I own 25% of the company now. So I've put a large proportion of my own life savings into the company, and all of that is where I've purchased shares online. I haven't had any options, any warrants, anything like that. And so I've actually put my money where my mouth is, and a number of the major shareholders are very much in the same boat. So that we've got quite a bit of cash in the game. And so what we're looking to do is to develop those assets. We've also got another offshore asset called Teodorico in the Adriatic, and that's quite a large field. It's got about 37 billion cubic meters of 2P reserves, and we won't be able to develop that ourselves in all likelihood, but we'll certainly get it to the point where we can sell it off. And we had a competent persons report done in 2022, and that valued that at around about 40 to 50 million Australian dollars. That we think that we could have a fairly large return to shareholders with that. We're not about chasing off after other fields or doing mergers and acquisitions and all those sorts of things. We're wanting to actually return money to shareholders. I know I want money returned to myself, and also most of the other major shareholders are very much united in that area there. So we have not made an announcement yet, but certainly once we've got these additional 4 or 5 wells drilled, we'll be making an announcement of the proportion that we're looking to return of that cash flow to shareholders by way of dividend or some sort of capital return. So we're certainly looking to make sure that we're keeping our costs to an absolute minimum. We're running it very frugally and very sensibly. We've got a terrific team of Italians on the ground in Rome who are former E&I people, and I've been delighted in the way that they've really been able to keep costs to a minimum through those dry periods when we had a long period of not getting approvals through and so forth. We were able to keep them on. They're very loyal to us. And so, we haven't had any cost blowouts. The Podere Maiar was on time and on budget. It was about a month delayed because of flooding in the Emilia-Romagna region near where the Grand Prix track is, if anyone's following Grand Prix in Italy. So the fire brigade couldn't come and give us the sign-off until they checked a number of other things. But other than that, we've been pretty much on schedule. So one of the secrets with small cap companies like our own, we're about a 60 million Australian dollar, 40 million euro company. That is the idea is we must make small promises and keep them, and not try to over egg things, but just get on with the business of developing the assets. Ultimately, these assets belong to Europeans, and my sense is we've had a number of people have made inquiries, organisations, companies. I think ultimately once we've got gas pumping and we've de-risked these assets, then we'll be a very, very lucrative target for any number of European companies that want to expand their footprint in northern Italy.
Okay, and so can I bring you back to
sure.
because I'm interested. Like we got to get to scale, but to do that, I'm just trying to understand the model of how you're going to do those sort of step changes. Like say the Italian government want you to move a bit quicker, but it's your money. You got to work out how you can allocate that kind of operating cash flow between new well capex, seismic acquisition, and whatever studies you're doing at Teodorico. Can you talk about a bit more detail about the timeline, the cash allocation amongst say those three things, or anything else that you can allocate your money, because returning money to shareholders eventually is great. I understand the time frame and what needs to be delivered to get you to the point where you can do that.
Okay, the cost of the seismic, I was quite surprised. It's come down quite dramatically. We now use very non-invasive seismic, and the company that's doing the seismic, it's all 3D seismic. There's no wires, and they put the pods out across the fields, and we're looking to do that over the course of the next month or so. By the time we interpret the seismic, it's going to be another 4 or 5 months, and we'll know exactly what we've got in 3D, and we'll know exactly where is the optimal place to drill. Contemporaneously, at the same time as we've done the seismic, interpreting the seismic, we're getting all the approvals through the ministry, so that we are looking to have mid next year to be in a position where we've got approvals to drill. We know exactly what we've got, where we're drilling, what we're doing, and then we will commence drilling. At the earliest, it will be Christmas next year. So it's not something that's going to happen tomorrow. The cost of the drilling, if we look at the Podere Maiar well, it cost us about 4 million euros. We own 63% as operator of this particular concession. We've got another AIM-listed company that owns 37%, and they basically will contribute 37% of the costs. And so our 63% is going to cost us, it's around about 4 million euros for the drilling, and for the installation plant and the pipeline connection to the grid was about 4 million. So it was about 8 million. So if you take that as a proxy, it may have gone up a little since 2022, but we're looking somewhere between 35, 40 million dollars. We've got around about $15 million in the bank at the moment. And then by the time we start drilling, we'll have about $25 million. So we'll have about 60 or just over 60% of what we require to do the drilling and installation. And we will continue to produce, God willing, the revenue as we go through that process. Once we've done the drilling, we then have the connection to the installation plant and the connection to the grid. So that's going to take another year, 18 months. So we're looking at probably 2.5 years when that revenue comes on stream, and there's no further expenses other than just the regular running costs to running the operation. And then we're in a position where we can have fairly substantial returns to shareholders. Our market cap being 60 million Australian dollars or 40 million euros, we're hoping to get up that way with our revenues. So either the capital price increases or we have a fairly substantial revenue that we're able to pay by way of dividends to our shareholders.
Okay. Thank you for that. And with regards to the one flowing well at the moment, what have you learned along the way in terms of, I'm thinking like recovery factors, or even just trying to understand the reservoir behaviour.
Very important.
It's very important. So how do you apply that to obviously second, third, fourth, fifth well? And what are your expectations, or do you have to look to analog reservoirs in the region?
Sure. The Podere Maiar well was it was tremendous. We've had no compression that we've had to use whatsoever. Giorgio Patuzzi, who's our on the spot engineer, he likes to describe it as it runs like a Swiss watch. He's from northern Italy and he likes the Swiss. But we've got a slick line next week. As a matter of fact, I'll be over in Rome next Monday. I'm flying across. We've been testing for water, for sand ingress, We've had no problems. After the first 2 or 3 months, it's settled down. And then from then on, it has been producing consistently at 79,000 to 80,000 standard cubic metres per day. We've done every slick line that we've done every couple of months, every few months. We've found that it's performing really well, and there's no need for any compression. And so the 2P reserves, we're looking at 7 or 8 years of 2P. The 3P reserves, one of the things that the competent persons report said was that we could run it at 100 standard cubic metres per day. But our people, we've got APE that are working with us, and Diego Ballestieri has been very strong on don't overstretch and don't push too hard. And so we're running it at 20% below what we could be running it at, because we just don't want to stress the well. We've got 2 areas, C1 and C3, that we can draw gas from. And so what we want to do is just run it as long as possible to increase the life of the actual the well, the reservoir, and with the other wells that we're drilling, we believe that they're very, very similar to the one that we've already drilled, but we'll know more about that once we've got this seismic analysed, and then we'll get to work with getting the approvals through so that we can drill those wells and then get them connected up and working from there.
And so you guys are working, obviously, the C2 depletion levels. I mean, you're obviously looking at that and analysing that data, but how does that compare to like what you saw at C1 or expectations at D level?
It's actually been performing better than we had anticipated.
Right.
But you keep your fingers crossed. Drilling oil and gas, and there's always risks involved, and there's things that can go wrong. But we've got the backup to I don't like just having one well operating. Once we've got 2 or 3 or 4, then we're going to be in much, much better shape. But the fact that we don't have very high costs, we don't have to dilute shareholders by having to go out and raise additional money. We can manage it, very effectively, and I feel very comfortable having that, 9 million euros in the bank, 15 million Australian dollars in the bank, and more coming in every month that goes by. So that gives me a lot of comfort that whatever we confront, we've got some really good seasoned experts, and we'll manage whatever it throws at us. But at the moment, it's been a very good run, and we've been delighted with the way that it's been performing.
Okay, like obviously at some point there will be decline. There will be depletion, obviously, and you will be doing infill or compression will come into it. But as these additional wells come online, you'll have more data with which to work. But with the next few wells, what are the kind of sort of step outs that you're looking at in terms of obviously managing the field properly and managing the pressure?
There's a very large well at what we call East Selva, and then there's 2 smaller wells, what we call North and South Selva, and we're looking to drill North and South Selva from the same pad, and you can use a diagonal well that can go to both of those fields, and so that's going to be quite effective. Ricardina is another very large well. Ian and I drilled it in the 70s, but they went on the wrong side of a fault line, and because they were moving on, they just left it at that. But we are particularly looking forward to getting the 3D seismic on the Ricardina prospect, because Giorgio particularly is really, and when they've looked at the 2D work, they have some very interesting geological interest that they've got there. So my sense is that once we've got that back, we'll have a much better idea of what we're going to have in this Ricardina prospect. And so the thing is, we'll have a lot more data. We'll have gas coming from a number of different locations. and therefore we've got a lot more flexibility in the way that we'll be able to manage the whole field.
Okay, interesting. And is this is pure gas, right? There's no kind of oil component to this, is
Pure
there?
gas, it's about 98%, 98.9 or something percent methane. The surface plant, in fact, uses the latest technology so that ultimately it pulls all of the required elements from the atmosphere, so that it's carbon neutral, and so it's a gas prospect. We've got a condensate prospect, which is a fairly large, much deeper prospect, which we're not looking at yet at Torre de Moro, and that's a gas condensate. It's also got some oil. But Italy is not so keen on oil at the moment. They're very, very supportive of gas as a transition fuel. So we're focusing on the gas, and we let go of a number of our concessions that were oil concessions, because of the fact that we wanted to be, as carbon neutral as possible. Also, we're looking at the prospect. We're doing some studies. We're talking to a number of groups about some carbon sequestration when the fields are depleted. So there's some opportunity there as well. So there's a number of things. We're looking at our optionality. We're being very sensible about the way we manage the assets. And my sense is that with the Teodorico offshore, once that has been de-risked and we've got the potential to sell that off, we've then got a fairly strong balance sheet, and we'll be in a position where there'll be a number of European players that will be interested in having this as part of their portfolio.
Yeah, I think if you're producing cash, then you increase your optionality for sure. So just in terms of this exploration kind of phase as well, is there an opportunity to kind of develop or co-develop kind of smaller accumulations using as a modular skid-mounted processing units?
Yeah, well, in the Selva Malvezzi concession, there is the 5 areas: Selva North and South, and there's Selva East, there's Ricardina. We've actually got a number of smaller fields at Carol de Sopra and a couple of other areas, which we can actually fairly easily drill those and develop those there, or we could actually sell them off. Our main game is the Selva Malvezzi concession and the Teodorico offshore, which we we'll have as an asset. But the actual company itself, the main focus of the company is developing in its entirety the Selva Malvezzi concession and bringing to bear all of the remaining gas pockets that are left there, and they're very, very profitable. When we look at the futures price for Dutch TTF, and we look at the forward pricing, they're still well above our best case scenario that we had 5 or 6 years ago. For over 10, 20 years, gas in northern Italy was selling at about 20 euro cents. We're selling it at least 50% higher than that, and sometimes even double that price. So naturally they'll start to settle, but certainly very, very profitable at anywhere between 20 and 30 standard euro cents per standard cubic metre.
Remind me, because we looked at the Po region, this is around 2010 ourselves back in banking days. There's lots of small projects, we even looked at E&I stuff as well, but there are also small projects to be picked up. Do you think when you say, we'll offload some of these things if we don't think it's core to us, are there buyers at the moment, or is it more someone who will do an accumulation and consolidation job?
There's a number of smaller players that have come in when E&I had to divest a lot of their assets back in the early 2000s. We're the only one that is actually in production. And so there are also a number of the larger players, Energian, E&I themselves, or there's the Enel, the French, there's the Rockhopper. There's a number of different operators that are operating now that there is such a strong overall support from the ministry and a desire to actually develop the onshore and the offshore domestic production. In fact, I was over there in June, and there was a group from the government that is really looking to try to analyse just what all the reserves are with all the different companies. So I think that for the foreseeable future, Italy is very much focused on domestic production. They're building a huge liquid LNG plant at Ravenna to tap in. But the cost of shipping that from America, if something happens in China or Taiwan or somewhere, or any crisis happens, they can't be certain of that. So they're very, very focused on domestic production now. So energy security seems to be the name of the game. That's what everybody's talking about at the moment.
Okay. And then you selling it, I totally understand, we talk about the Russia-Ukraine, great opportunity for those in the game. But who are you selling to? And, and what are the terms? And are they kind of fixed? Do they change? Is there some kind of index volatility component to this?
In Italy, what happens is every year you actually bid a contract. We were selling to BP Gas Marketing. They were fantastic. We sold onto the grid, and they were the end user. And just this last September, just a month ago, we made the decision that Hera, which is in the top 50 Italian companies, based in Bologna, a local company. They gave us extremely good terms, and we made the decision that with all of the local municipalities and the local people, we wanted to sell to the local company Hera. So they've got a contract with us now, and our terms are confidential, but they're very close to the Dutch TTF price. But we've got. We want to we could lock in prices, but one of the things we've been able to benefit from is we give 24 hours beforehand, we actually name the amount, and then we get a price there, and that's served us extremely well for the last 2.5 years. And so we've got people that are looking at that.
So the Dutch title transfer, that's the TTF, right?
Yeah.
Versus
yeah.
PSV. Okay. Understood.
It's a good product.
For sure. Is this, and so this is a take or pay? Is it? I mean, how quickly do you get the cash? I guess
we get the cash within 30 days.
Okay, cool.
So every month we get a monthly. Yeah. So we just nominate the day before, and we have the 20th of the month. It's paid through, so we keep a very tight watch on all of that, and we then have our joint venture partner that has the 37%.
And so remind me in terms of the is this at wellhead or point of delivery? I've forgotten what you said earlier.
Delivery, which is only 2 kilometres from wellhead. Yeah,
got you.
Yep.
And
where it connects to what they call the SNAM pipeline, which is the Italian it transports the gas. So this is the Italian. They've got a fantastic grid right across Italy, which just happens to run right through the middle of our concession.
Got you. Okay, and understood. And in terms of you mentioned 10% royalty, obviously there's some variability to this. Is any of it? Is it some of it fixed, some of it variable? Again, how does it work?
It's 10% that's paid in June each year. And
Sweet,
so
okay.
in the first year, we didn't quite go over the limit they're required to pay the royalty. But then the second year now, we've actually we've put aside cash. With our cash flow, that's going to be coming up in June. So we'll be paying that each year. And so
Okay, so and then I guess you paid in euros. You kind of keep the money in euros, but you report in Aussie.
Yeah.
Okay, got it. Understood.
We've got a wholly owned subsidiary, Pay Valley Operations, that operates in Italy, and we do all of our accounting in Italy. We pay our VAT and pay all of those sorts of things, and then we transfer the cash back to our Australian company, which is Po Valley Operations is a wholly owned subsidiary.
Right. And are you hedging some or all of this?
There's no, we haven't got any hedging.
Okay.
With the euro to the Australian dollar, and it fluctuates, but it's fine. That's where we're operating. Our expenses are in Italy, our revenues are in Italy, and then we intend to pay our expenses. So we're not bringing the money back to Australia to be distributing it. But once we do bring the money back to Australia, we'll look at that at that time. But at the moment, you actually receive the revenue in the same domicile as you actually pay your expenses. So we've got no currency exposure there.
No, and right, and I was thinking more hedging in terms of achievable and payable price. Given as you've described, it's kind of
forward payments and all that. Yeah.
Politically,
we get the futures price all the time, but ultimately, no, we're able to actually massage that. We've done quite well with just giving the day ahead pricing.
Okay, cool. Well, okay, that's a kind of good romp through that. And so, what do I take away from this? What should I be thinking about your growth prospects?
Sure. What we've got is we're a cash-based company. We're selling gas. We're in production, and we've got some upside from expanding our production from the $10,000 that we are receiving at the moment to drill another 4 or 5 wells to bring that into production over the next 2 to 3 years. And then we've got a fairly utility style cash flow business that's able to return that cash to shareholders, or with capital return, or we've got Tierra del Rico, which is a bit of blue sky. Whatever once we've got that there, and we've got the potential for some other wells, and Torre de Moro, which is a gas condensate. But fundamentally, we're going to be spending the money on drilling these additional wells, and then we're looking to return it to shareholders. And so that's the name of the game. It's a business that we're looking at to de-risk over the next 2 to 3 years. And there's nothing more to it than that, de-risking it and making sure that the investors who've been investing in the company get a really good return on their investment. It's a nice, steady return, and that's what we're aiming to achieve. It's a company we're running for 2 to 3 years to bring it to that state, and in the meantime, we're not interested in speculating or the price going up or going down. We're just interested in doing the job right, rather than running around and chasing after windmills like Don Quixote.
Well, look, and I guess you reminded me that investors like Michael Gentili, we've had a few of his companies on recently as well. He's invested into you. When did he jump on board?
Yeah, so Michael's very astute. He does his homework, and we've been delighted. He's from Canada. He's invests in the resource sector. He invests, his first love was oil and gas. And he invests in oil and gas and copper and gold and silver and zinc and quite a range of investments. But what he does is he rolls his sleeves up, he gets involved, and he's taken a seat on the board with us. So we were delighted that he joined us back in about this time last year. And so he's got incredible insights and wisdom, and so we've got a great board, and we've got a great team on the ground in Italy. And so I feel very, very comfortable, very confident. Michael's attitude to just about all of his investments is that he takes 5 to 10 year view. He's not interested in jumping in and jumping out. He looks at it like a business, and that's very much aligned with the way that I've been looking at Po Valley, and that's what attracted him to what we're doing here with Po Valley Energy.
Okay, Kevin, I appreciate your time today. Maybe next time we can get a little bit more technical, and once you've got a bit more drilling info for us, and we'll talk through that. So stay in touch.
Sounds great. Thanks very much, Matthew.